If I could only have one stock or one setup going into the next couple of months, that would be Tesla. Each and every single requirement in order for me to go long on a stock is being met right now. We have bullish structure, price is pulling back into the institutional buy zone, meaning that price is at an extreme discount. Buyers are stepping in on the larger time frames, indicated by the BX trender showing higher lows multiple weeks in a row. And on top of that, the monthly market bias is also being tested. So this means that we are trading at a massive discount within bullish structure and buyers are stepping in. Now, because all of our criteria is met, that obviously means that the stock has to go up and there's no way that we can lose. No, of course not. Historically, with this setup, we only have a 61% win rate, even though we've made over $4 million in the past 2 years. And that's because you can be wrong 40% of the time if you're using proper risk management. And more importantly, you're focusing on risk versus reward over accuracy. What this means is that when I'm taking a trade and I'm predefining my take profit versus my stop loss, that I will get paid at least double what I'm willing to lose. Really, what I'd want is 3 or 4 times what I'm willing to lose. On Tesla, we know that an entry point right where we are right now, $250, would be pretty decent. From this point, we know that our stop loss should be set at a lower low on the BX or a break in this case of $220. So this gives us a downside of 12%. Losses happen. There's no way to get around them. So we need to instead being scared of them to actually sit here and know what the loss will look like when we execute it. Now to the upside, we need to find our targets. Well, our main target is going to be this weekly BX trender. If there's anywhere that we're going to reject, it will be up there. So worst case, I think that there's about a 30% upside. So that means that if we have a historical win rate of 60%, which is basically better than a coin toss, but when we lose, we're going to lose 12%. And when we win, we're going to win 30 to 34%. Then that means we have very close to a 3-to-1 risk versus reward ratio. Now, I say this all the time, but if you want to understand what that feels like, take a quarter or a coin. In this case, it's a camera lens. Pretend that when it lands on heads, you're going to get paid $300. And when it lands on tails, you're going to lose $100. Sit there and flip the coin 100 times and mark down how many times you win and how many times you lose. And that is how you will feel what this trading style is like, because you're not going to win all of the time. You could flip this 100 times and 5 times in a row get tails, or even 6 times in a row get tails. It's infinite, really. There's a point you could potentially even get 10 in a row that are tails. And that is why so many people fail, because they're focusing on loss aversion versus losing responsibly. But understand that just the 30% move up is to our first target. If this plays out like they normally do, then we should move at least back up to equal highs or all-time highs, which gives us a 90% upside with about a 10 to 15% downside, which could juice that risk versus reward from 3-to-1 all the way up to maybe 8-to-1 or 9-to-1. So I will take this setup every single day, irregardless of how it actually plays out. If this video helped, I made an entire course going over how to spot this setup and how we trade it. The link to our courses will be down in the description, and the one I recommend using is the Smart Money Mastery course. That one setup has made us over $4 million in the past 24 months, like we said, with only a 61% win rate. And it's not like that's over 1, 2, 3, 4 trades. No, that's over close to 3,000 trades. Let's see how this setup plays out, and hopefully we make a profit.